So you've got a vehicle in India. You know that every single time you go to register it, you've got to get third-party insurance. It can feel like just another piece of paperwork, right? Another box to tick. But what is it really? And why is it so non-negotiable? Well, let's break it all down.
I mean, have you ever actually stopped and wondered why? Why is this rule so strict? Is it just some bureaucratic red tape, or is there a really important reason behind it? Well, the answer has nothing to do with protecting your vehicle and everything to do with protecting everyone else.
You see, the whole point of this law comes down to one crucial idea. It's not about your car. It's about creating a financial safety net for anybody else on the road who might get hurt in an accident that you cause. Just imagine someone facing huge medical bills, or they can't work, and they have no way to get compensation because the driver can't afford to pay. This law is designed to stop that exact scenario from ever happening.
And the law itself? It's crystal clear. Section 146 of the Motor Vehicles Act doesn't mess around. It basically says if your vehicle is in a public place, which, let's be real, is pretty much anywhere you drive, it must have an insurance policy in force. For pretty much all of us, there's just no way around it.
But wait a minute. Does this rule apply to every single vehicle on the road? No exceptions at all? Well, while the law is incredibly strict, it does carve out a few very specific situations where this insurance isn't required. Let's take a look at who actually gets a pass.
Okay, so these exemptions are pretty rare, and you're probably not on this list. We're talking about vehicles owned by the government, but only when they're not being used for commercial stuff. Or certain transport authorities, but only if they have their own special fund set aside to handle claims. There's even a little protection for a paid driver who honestly had no idea their boss let the insurance lapse. And those trucks carrying hazardous materials, they've got a whole other law that covers them. But for you and me, the rule is solid as a rock. All right, so you have to have it. We've established that. But what are you actually paying for? Let's dig into what this whole third-party thing really means and what your policy is supposed to cover when things go wrong.
The key to unlocking all of this is right there in the name, third party. So who is the third party? It's simple. It's not you. And it's not your insurance company. It is the other person, the one who suffered some kind of loss, whether it's an injury or damage to their property because of an accident with your vehicle.
It really helps to think of it like there are three players in the game. You, the owner of the vehicle, you're the first party. Your insurance company, the one you pay, they're the second party. And that means the other person, the one who's making a claim against you, you got it, they're the third party. Your policy is just a promise from the second party to pay the third party for you.
So your policy has to cover the really big, serious stuff. We're talking about your liability for someone's death or injury and for damage to their property. It also covers paying passengers in commercial vehicles. But, and this is a really critical point, there's an exception you need to know about. These gratuitous passengers in a goods vehicle. What does that mean in plain English? If you give a friend a free ride in the back of your truck and an accident happens, your basic third-party policy might not cover their injuries. That is a huge, huge risk.
Okay, so knowing the coverage is one thing, but the real test is what happens after an accident. What's the actual process? Let's walk through the journey of a claim, right from the crash to the final payment. The whole process is really designed to be as quick as possible. Once your insurer gets the news, they put someone on the case. That person's job is to investigate and then make a settlement offer directly to the third party. Now, the claimant can either say, yep, sounds fair, and the case is closed, or they can say, no way, and reject it. If that happens, the whole thing goes to a special court called the Motor Accident Claims Tribunal.
Now, to make sure victims aren't just left waiting around forever, the law puts a strict timer on the insurance company, and the number you need to remember is 30. 30 days. From the day they're officially told about the accident, they have just 30 days to do their homework and make that settlement offer. This is a big deal. It forces them to act fast.
And the clock doesn't stop there. Once a settlement is actually agreed on, another 30-day countdown begins. The insurer is legally required to pay the full amount within that second 30-day window. This makes sure that a settled claim actually turns into cash in the victim's hand without any unnecessary delays.
This brings us to a really important question. You've done everything right, you've paid your premium, you have a valid policy, but are there situations where your insurance company can just turn around and refuse to pay a third-party claim, leaving you on the hook for the whole amount? The answer is yes.
Now, an insurer can't just deny a claim because they feel like it. The law is very, very specific about the violations that can completely void your policy. So you should think of this next part as the ultimate checklist of what not to do if you want your insurance to actually work.
These are the absolute deal breakers. An insurer can refuse to pay up if you were using your vehicle for racing, if you were driving under the influence, if you were using your personal car like an illegal taxi. They can also deny a claim if your license was suspended, if you lied about something important to get the policy, or, of course, the most obvious one, if you never actually paid for the insurance in the first place. The message here is simple. Your policy is a contract, and if you break your side of the bargain, you could be left totally exposed.
Whew! Okay, we've gone through the why, the what, and the how of third-party insurance. So let's just take a moment and lock in the key points that you absolutely need to remember from all of this.
Let's boil it all down. First, it's mandatory. It is the law, not a choice. Second, remember its whole purpose is to protect other people, not your own vehicle. Third, that claims process has strict deadlines for a very good reason. And finally, and this is probably the most important one, your actions matter. Breaking the rules, like driving drunk or racing, can make your insurance policy completely worthless right when you need it the most. And that really brings us to one last critical thought. This insurance, the legal minimum, is all about protecting everyone else on the road, but it does absolutely nothing for the damage to your own car or for your own medical bills if you get hurt. So the question you should be asking yourself is this: is the legal minimum truly enough to protect you?